Philip Flynn, shares of Green Bay-based Associated Banc-Corp are up around 13% over the past year. That's in line with the XLF, which is the financial ETF. So tell me what's going on in Green Bay. What's the environment like right now for banks?
You know, the banking environment has been fine this last few years. I wouldn't say it's been terribly robust. The economy is growing modestly, and banks are doing reasonably well. The low interest rate environment is difficult for all banks to operate in. The regulatory environment is challenging. For us in Green Bay, we're a $27 billion bank. We operate in the upper Midwest. We have offices that go from the Twin Cities all the way down through Wisconsin, Chicago, down towards St. Louis, and then loan production offices in 5 other states.
Well, your loans were up 8%, so I think $17 billion at last check. So where is that money going to? Which industries, which sectors of the economy?
Sure, we have a very balanced loan book, so you're seeing decent growth in the commercial businesses, a lot of manufacturing in the upper Midwest in our footprint. We're the largest mortgage lender in the state of Wisconsin, so we have a very big residential mortgage book. We're an active commercial real estate lender. We run that business out of Chicago. And then we have a few specialty businesses.
Meanwhile, deposits were only up 1%. These low interest rates are just killing savers. So how closely are you watching what Fed Chair Janet Yellen is saying to get a little bit of relief for savers out there?
Yeah, it's very important. You know, we've got a lot of long-time depositors who are somewhat frustrated with the rates that we pay and all banks pay. But in this very low rate environment, of course, you know, we have to manage what we pay out in interest expense. So movement from the Fed is going to be very helpful for savers and the banking industry.
And you're actually reducing the number of branches out there. Talk about your branch count now, where you want to be by the end of 2015.
Sure. We have reduced our branches by about almost 30% over these last few years. The reason is people have changed their banking habits. We have a very robust online offering, mobile offering, image-enabled ATM machines. We just don't have the foot traffic in branches anymore. Associated, we're about where we need to be. 200-something branches, that's about the right number for us now.
And then who are your biggest competitors in your area? Because you mentioned that it's harder for some of the smaller players to deal with Dodd-Frank. The big guys have a lot of lawyers. They can just put that in the cost of doing business. But it's harder, those regulations, for smaller players like Associated.
Well, we're kind of right in between. So Dodd-Frank made it very difficult for the banks at $50 billion and over. So despite all their lawyers, it's still a tough regulatory environment. For the banks 10 and over like us, we still have a lot of new requirements, not as much as the big guys. Smaller banks below us, new regulations trickle down onto them too. Tough time for all the banks. Smaller banks, I think, don't have the scale to deal with this as much. We have the scale to manage this okay.
All right, and you're still buying back shares. You put $100 million in the fourth quarter, I think it's a 2.2% dividend. Right. What are your plans for that over the course of 2015?
Well, we raised our dividend in the fourth quarter, so we're now paying out 10 cents a quarter. We'll take another look at that dividend as we always do each year. And we've been very active buyers of the shares, one of the more active banks buying back shares. We bought back 14 million shares of stock last year. And we will continue to look at that as one of our options in deploying capital.
All right, thanks a lot for coming on, Phil.
Thanks, Greg. Appreciate it.
Thank you for watching The Street.